Hi there, so I just want to make a quick update video for you about AT&T today. I've got really four pieces of news for you today. I'll give you a quick overview of what they are and then we'll go into the detail. So first thing is about Warner Brothers releasing all of its movies direct to the theatre and to HBO Max at the same time in 2021. The second thing is a deal with Roku. The third thing are the bids for direct TV, the sale of, and the fourth thing is the dividend and what on earth is going on there. Okay, if you're new to this channel, welcome. My name's Andy. On this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I make a new video. And if you like this content and find it useful, please do remember to hit the thumbs up because that really helps the channel, which in turn helps me and I do appreciate it. Now I have made a much more in-depth video about AT&T fairly recently. This is kind of an update from that video, so I'm not going to be analysing the stock price. I'm not going to be analysing in the depth that I ordinarily would. If you are interested in seeing that, I'll put a link up there and in the description down below to that video and you can check that out at your leisure. Maybe watch that video and then come back to this one, or watch this one then go to that one. That's up to you, no problem. Okay, so the first piece of news, let's take a look. So here's your first piece of news. Warner Brothers will launch every 2021 movie on HBO Max at the same time as they hit theatres. Now the key points, as they've listed quite rightly there, AT&T, Warner Brothers announced that all of its films scheduled to launch in 2021 will be released on HBO Max at the same time as they're available in theatres. That's cinemas if you're here in the UK, and it's an example of how AT&T is adapting to the coronavirus pandemic, allowing people to safely watch new movies at home without having to venture out to a movie theatre, and it's currently a one-year plan. I actually suspect that it's not just for the purpose of keeping people safe, okay? You've got to understand, AT&T, they've got a backlog now of movies that have been made up. For example, the Wonder Woman 1994 movie was due to release in 2020. They have a whole host of other movies that were due to release in 2020. They've got them already made. They're sitting on the shelf. They're doing nothing. They're making no money. So what they've thought is, I know, let's release them on HBO Max at the same time as in the movie theatre in 2021. They know that when the movie theatres open up, the movie theatres may well open up on reduced capacity. Now they might not, the movie theatres might open up at full capacity, but I would be surprised. I suspect movie theatres will open up at reduced capacity. That is going to hinder the blockbuster performance of potential blockbuster movies in the theatres. Now then, from Warner Brothers, which is AT&T owned Warner Brothers, point of view, they make a lot of money from those blockbuster releases in cinemas. So that's an expensive thing to not release it there. And this is a big gamble play that the management are taking really by releasing it to HBO Max. But there's a few good reasons for them to do it. And I've got to say, I think they're right to do it. And actually, the next thing I'm going to show you actually shows, in my view, it's already started to pay off. Okay, so the reason that they've intended to do this is so that they can increase their streaming subscriber base on HBO Max, which gets recurring revenue. Anybody who knows me knows I'm a massive fan of companies with recurring revenue. That business model I absolutely love. So subscriber base is going to be having more subscribers to HBO Max. That is its key goal. Now, I read one article, analyst I think had worked out that they need about 8.5 million extra subscribers on HBO Max to make this kind of gamble pay off, if you like. So let's hope they get that. They may not, but either way, you can be certain it will boost the number of subscribers to HBO Max because there'll be certain movies. For, you know, say someone wants a particular DC movie and they want to see that particular DC movie but don't want to go to the cinema because maybe they're afraid they'll get ill or whatever reason, then actually they may take a subscription of HBO Max, which will obviously increase that subscriber base. Now, the other reason that they would have done this is because they wanted to get onto all devices. They'd done a deal with Amazon to get onto their Kindle devices, and they were trying to do a deal with Roku. And that's the next piece of news. After they did this and announced that they were going to be releasing it, this puts a lot of pressure on Roku to do a deal with them. That has happened now, and Roku have done a deal with them. So let's have a quick look at that story now. As you can see, HBO Max seals deal with Roku, making streaming distribution footprint complete. Warner Media and Roku have finally reached a deal for HBO Max, bringing the subscription streaming outlet to Roku's 46 million active accounts and filling a key distribution gap ahead of the string of Warner Brother film releases. Along with Amazon Fire TV, Roku has emerged as a gatekeeper for streaming. So that has instantly made it much more accessible to 46 million more people, which was obviously a fantastic move, and that in itself will help to increase the subscriber base of HBO Max, which at the end of the day, AT&T are looking to make that a contender and a competitor to the likes of Netflix, Disney+. So that is obviously one of their key goals, to achieve that, and this is a big step in the right direction for that. Now, will the release thing really only be for a year? Time will tell. They do make a lot of money by releasing things first to the cinemas, so I would expect that they will probably have some films released first to cinemas, and they may have other films that they release to both at once, to make it very attractive to maintain that subscriber base for HBO Max. But I could be wrong. It might be that from now on, that's it. They are just releasing it to both at the same time forevermore. Now, if that is the case, that would be bad news for AMC theatres and any theatres or cinema companies, which in turn would be bad news for EPR Properties, which is another company that I invest in and follow, and I've made many videos about EPR Properties. I'll put a link to those in the description down below. I'll put a link to one of those up above there now, or to a playlist of those if I've got one as well, and you can have a look through that if you happen to be an investor in EPR Properties. But clearly, from an investor of EPR Property point of view, this is not a good thing, but I don't think it's going to be a detrimental thing. But I will make an update video about EPR Properties in the new year, so I'll get back to that then. I'm not going to go into that now. This video is about AT&T and what's going on with them. From an AT&T perspective, this was a smart move. I can't argue with it. It's already started to pay off in my view. And if they get many more subscribers, like I said, I think it was 8.5 million more subscribers as a result, then it will be deemed a success, and that would be great. And either way, it's probably the right thing to do for 2021. Because we don't know what capacity the cinemas are going to even be allowed to open at anyway. So if you're in the position that AT&T are, Warner Brothers are, with this backlog catalogue, you might as well do something with it and get some value out of it now. So it makes perfect sense. So the next thing here is Warner Media parent AT&T gets direct TV bids valuing satellite broadcasting at over 15 billion. So it's basically had bids offered in at over 15 billion. They already sold Crunchyroll to Sony's Funimation for close to 1.2 billion, which was cheap, but that got rid of Crunchyroll, which was not particularly doing them any good anyway. Getting rid of DirecTV is another good thing to get rid of. If you're not aware, AT&T have expanded. They've spent a lot of money buying up things that really they shouldn't have bought up. But actually, you could look at it as maybe smart. They have learned from DirecTV, which was a satellite TV company essentially. They will have learned what the users are liking, what the users are doing, and they will have used that information when creating HBO Max, which is something, as you can see, they are really focused on pushing, which has a much lower cost to push and could be pushed worldwide quite easily because it's internet-based, very much like Netflix or Amazon Prime or Disney+. So there's much greater scope for expanding HBO Plus. I've got to be honest, I'm a big fan. I think HBO Max, is a great product, and I think has great prospects basically to do very well. So getting rid of DirecTV will be good. That will give them more money to pay down that balance sheet and pay down that debt, which is one of the goals they want to achieve. Which leads me on to the dividend and what is going on with the dividend. Well, if you've been a long-term AT&T investor, you will know that in December they announce what their dividend is going to be for the first quarter of the following year. They've done that for years, and normally in December that announcement will be a dividend increase of 1 penny. This year, what have they done? They've kept it the same. Yeah, really, they've kept it the same. After increasing their dividends year on year for over 50 years, this December they kept it the same. So does that mean they'll lose their dividend king status? No. They could still increase their dividend at some point in 2021 to maintain that status. So don't be surprised if they do. My view is they will. As I've said before, it would be a very brave CEO to say we're not raising our dividends and essentially losing dividend king status, especially on a share where the share price has been going down as it has for AT&T over a longer period of time, that is. So it's not exactly a strong share price. However, I think what they've done is fairly smart, because you want to focus on paying down the debt. That's important. Not increasing the dividend helps with that. Now, AT&T, as I mentioned in my previous video that I've already linked to above and below, has good cash flow, so it can pay the dividend. It can pay an increased dividend. That's not a problem. That has never been in question. But by not increasing the dividend does mean they'll have a little bit more cash flow earlier on to pay down some of that debt. Selling DirecTV will allow more pay down of that debt. Releasing and growing the subscriber base for HBO Max by releasing those movies to the theatre and HBO Max at the same time will, in the short term, increase at least the HBO Max subscriber base, or at least that's the plan, which will then give even more revenue in to further pay down that debt. So I wouldn't be surprised if in mid to late 2021 they decide to increase the dividend to maintain the dividend king status, and at the same time they will have done some work to increase the debt. And if they have done that, don't be surprised if the share price doesn't go up quite a bit. So see how that goes, and we'll have to wait and see how that goes. That will be very interesting to see, and I'll be sitting on the sidelines. Make no mistake, the sale of DirecTV and Crunchyroll combined is nowhere near enough to pay down their debt. Off the top of my head, I think it pays about 1/10 of their debt down, but that's a start, isn't it? And they have the free cash flow to pay that debt off, so I'm personally not too worried about it, but I'm pleased that they're paying it down. That is a good thing. I am disappointed that they haven't increased the dividend, because it was like clockwork, and from a dividend investor's point of view, it was good to see. December came and you got an increase, but whether it's going to continue or not is yet to be seen. Like I say, I'm hopeful that it will, but there is no guarantee. So, you don't want to buy it on the pretense that there'll definitely be a dividend increase. We're talking about a stock with a very high dividend yield compared to its peers at the moment. It's paying a dividend yield of over 6%, almost 7% right now. So that is a high dividend yield. We're in a year where many companies have suspended the dividends. So actually, this is a good time for them to choose to delay that increase, if you like. And they have clearly said that their focus is on paying down debt, which all investors in AT&T should be happy about, because that will increase the intrinsic value of the company overall, which in turn will increase the share price. So if you own shares, the value will go up. I appreciate if you're a dividend investor who's, say, a retired dividend investor who's wanting the dividends as retirement, I appreciate you'll be extremely annoyed about this, but it's very likely that it will increase again, in my personal view. Now, I don't have a crystal ball, so I can't guarantee you that that is going to be the case, but I would be surprised if in the next 12 months we don't see an increase in dividend from AT&T. So we'll see whether I'm going to be right or wrong about that, but that's my thoughts on it. Anyway, I hope you found this useful. I hope it's been interesting. Thanks so much for watching, and bye-bye.